So if you look at overall consumption space, jewelry is one place which has done pretty well. But across other consumption spaces, if we start looking at that, consumer staples are not seeing any significant improvement in volumes. Car makers are talking about increased discounts. So overall consumption is not doing well. And to an extent, that is also driven by the macro, where both fiscal and monetary policy in India has been somewhat restrictive over the past few months. So yeah, it's okay. One part is doing well, but overall consumption in India is still not doing well over the last 3 to 6 months.
Yeah, and so do you think to that extent, maybe the market is looking expensive, where valuations stand? And how much can the festive season really justify these rich valuations?
The story of India is twofold. One is valuations. They're expensive, but I think valuations are expensive because the execution is very good. Overall, India is one of a very few markets which on longer term has given you double-digit US dollar terms EPS growth. So I would start looking at EPS growth. EPS growth last couple of years has been very strong. What I see now, current quarter, could be somewhat weaker. We could see some EPS numbers being cut off. And that is largely, as I said, because the fiscal and monetary policy both have been slightly restrictive over the past few months. So in short term, there should be volatility. There could be volatility in the market. There could be some correction. And I think for us, that would be opportunity to buy more, as we think that even in longer term, the earnings flow in India should continue to remain strong.
But what would trigger a correction? And how significant a correction could be? I mean, correction, if you're talking about, do you think the market has the potential to fall 10%? I mean, does it have, is it facing a risk big enough to take it down 10% or more?
I don't know. That's the answer. See, we are long term. We think more from 3 to 5 years, and I remain very significantly positive over 3 to 5 years. In short term, what could trigger a correction? There could be many things. SEBI has come out with repeated statements against F&O. Could that curtail some of the animal spirits? The RBI is still taking a rather restrictive policy. If they stay restrictive, could that be an impact? Fiscal spending has been lower compared to what we expected. That is another thing. Could oil surprise us? Middle East is a big risk place. So if we start looking at, there are a number of risks which we see, which are there in short term across for Indian markets. But when we start looking on 3 to 5 years, there has so many companies in India where execution has been very great, which have been consistent compounding machines. And I think we still would make good money in India if we stay there for next 3 to 5 years.